さあ、それでは次のセッションを始めましょう。Let's begin the next session. テーマは ETF とデジタル資産です。The theme is ETFs and digital assets. Speakers are Bitwise Asset Management, Executive Management, General Counsel and CCO, Katherine Dowling, DigiFT Founder and CEO, Henry Zhang, Tokyo FinTech Representative Director, Norbert Gehrke. それではよろしくお願いいたします。Please come up on the stage.
Good evening. We are now the opening act for Guitar-san, which is quite a pleasure. Great stuff. We should talk about the future of finance, and many of the future of finance books I've read, 80% talk about the past and how we got here, so there's not much about the future. But at the same time, innovation, most of the time, is a combination of existing things rather than having this light bulb and creating something entirely new. So I'd like to postulate that what the two of you doing is, one is doing new products on old rails, and the other is doing old products on new rails. And so Katherine, maybe I can task you first with explaining your products and rails.
All right, new products, absolutely. So this year has been an historic year for product launches in crypto in the US. We were able to launch in January the spot Bitcoin ETF, and we followed that up about 6 months later with the spot ETH ETF. So this is the first time you could have spot Bitcoin in an ETF wrapper, and then later on spot ETH in an ETF wrapper. So why is this important? It's important because this actually opens up the ability for investors to invest in these assets in a brokerage account, which places it also under the purview of their financial advisor. And it also creates a regulated wrapper around these products that provides a lot of information about the product. So going through the SEC process in the United States, you go through what's known as the S1 filing, where these products are registered, and that is an iterative back and forth process from the issuer, like Bitwise, and the regulator to answer a series of questions in this S1 disclosure document that then is updated regularly for the investor. So this is a huge information gain to be able to provide this type of product in this regulated wrapper for the first time ever. And it was about, for us, we were 6 years at it, going back and forth with the regulator. At heart, Bitwise is a research organization, so a lot of our dialogue with the SEC was answering questions about how the product would work, like actually going into the SEC and whiteboard diagramming each step, each operational step along the way, and describing at each juncture who would touch the Bitcoin, who would not touch the Bitcoin, and how it would work for the end investor. So in doing that, to your question, Norbert, right, we do look to existing products because that's how it's easiest from kind of a professorial standpoint to explain to the regulator how it's going to work. So we do look to the older products when we're launching products like this. And there's a whole, outside of the research back and forth, there's a whole slew of drama that went into the launch, just from a regulator standpoint, and there were lawsuits that led into it, but I'll move on and we can get into that if we get into it.
I mean, the first ETF came out in 1990 in Canada and 3 years later in the US, so that's what I meant with the old rails.
Yeah, no, absolutely. I mean, part of our dialogue with the regulator was thankfully, crypto is a global asset. So we were able to point to a number of other jurisdictions that already had this mechanically, which is very helpful, because then you're taking it out of kind of the ivory tower. Here's how it might work, and you can point to jurisdictions where it's already working. One significant difference in the U.S. is that we currently, in the current rendition of the product, it's a cash only. In other jurisdictions, this is being done through in-kind. And there's some very technical reasons why the SEC was not yet comfortable to come out and allow for, in an ETF, what's known as in-kind creations and in-kind redemptions. They felt more comfortable with a cash only, which creates more steps in the process, so it's not as efficient, but it's still a great first product to get out there, get moving. And again, we'll have that product, it's working well, and then down the line, we'll figure out with the regulator how we get them comfortable with adding an in-kind aspect to it.
Got it. Thank you. And so, Henry, you've got the new rails, very adventurous construct, approved by the MAS. Tell us more.
Yeah, happy to address that. DigiFT is a marketplace. You call it exchange, blockchain-based. So talking about the new rails, basically is what's a new rail? It is the assets in the token way. All kind of assets, when we say the so-called traditional assets or TradFi assets, now be represented in a new way, new form, which is in the token. Then subscribe, redeem, and trade and own those assets in the token way. That's called the new way. Look at the history. Actually, this is not something. It's something new, but it's a very, very natural progress. Only 3 stages in terms of representation of ownership. Stage 1, I may say, is things are represented in a paper way. So the stock is in the paper, the certificate of the property is also paper. Then people trade papers. Now moving to the current stage is mostly represented in the electronic way. It's an electronic record. We put the money in the bank, then we no longer to receive a piece of paper as a depository certificate. We go to the website, say I have kind of 100,000 in the bank, so electronic, and all how much you own by Tesla or NVIDIA is also not just evidence, electronic record provided by the broker-dealer, for example. That's the current stage. Then the people trade these kind of things and reflect in the electronic records. Now moving forward, what will be? The background is we have another set of infrastructure, which is mainly blockchain-based. So on the blockchain, the record is on blockchain, then it's called in a token way. So the representative of ownership is now becoming the token. Money can be in the token, so-called stable coin, later on maybe CBDC. And the traditional assets can be represented in a token way. So again, it's more like a wrapped money market fund, treasury notes in a token way. That's called the new way because it's not very popular for the moment. Since the ownership has been represented in a token way, then trade and settle all the things on the blockchain-based token, which represented much more efficiency. That's why I call the new way. But that said is, before I finish addressing this first question, I would say we do see the convergence of so-called new and old. Katherine just mentioned is ETF is like a wrapper of the BTC, for example. Then people can buy and sell in a more traditional way or older way. It is a Web3 to Web2, right? Web3 underlying because it's already in the token, but it wrapped into ETF way. Then the people can go to the current exchange to get it. On the other side, the traditional thing like T-bills wrapped in the token way. Then the people can purchase it and settle it in a token way. So you can not only use in US dollar, but can also use in USDC, for example, to get it. Looks like 2 things, from old to new and new to old, but basically it's a trend of convergence. So I do see no matter so-called old asset or new assets or the old way or new way, there's a trend of convergence. That's very exciting thing. Happy to address later in the conversation.
We will get to that. Going from that, Katherine, I mean, I can have a normal brokerage account now and I can buy these Bitcoin ETFs. At the same time, it also makes it accessible for institutions and for institutions to distribute to their clients. And we always talk about the next billion users in crypto. What has the experience been so far in terms of penetrating further into the retail client base?
Yeah, absolutely. So the initial wave, which has been billions in these products, there are a number of issuers, the SEC lined all of us up at once. The initial wave has been more retail heavy. However, there are a number of the what we call wirehouses. They can't jump in right out of the gates because they have a fiduciary duty to their clients, their end clients, to diligence the different issuers. So what's happening now is you're having all of those entities that have even more assets that can be brought to bear within these products. They're doing that diligence to make sure that they can bring these issuers on their respective platforms. And in so doing, once they're comfortable with doing that, then that will unlock more institutional capital into the space. So it's a process. So again, in January, when the spot Bitcoin launch occurred, some of those entities would not be able to jump in at that time and invest or recommend to their clients that they invest. But that's coming down the pike. So you're going to have more waves as you see that diligence work that takes place kind of behind the scenes going on.
So with my traditional securities broker account, I also have a KYC, but my traditional securities brokerage account doesn't really allow me to trade on DigiFT. So how do you solve that side of the problem, the compliance, KYC, AML aspects?
Yeah, some people say a DeFi means deregulation, or something called a DeFi means not KYC. Personally, I tend to disagree with that because DeFi and the regulation, they are two different concepts. DeFi, centralized technology, decentralized technology, is more like a technical way to approach the things. Then this KYC, the real name, anonymous, is a different story. It's a different thing. So there are two different topics. So that's why decentralized finance doesn't mean equally just go to deregulation. There's a ways to address that. Or some will not talk about the real name DeFi or institutional DeFi or regulated DeFi. That said is KYC, it is one of the fundamental building blocks for the modern financial system, which has been widely accepted. And I also don't see the immediate need to change it. In a real name basis, KYC AML is for financial system, building block is beyond financial system. So it's very fundamental. So no matter which technology to use, this fundamental, I don't see it's going to be changed and no need to be changed. On the other side is, then we bring this so-called the KYC AML thing on-chain is also very doable. Brokerage account, the people get a KYC'd. If we can transfer this data to say you are KYC the person and the wallet, so-called the real name wallet, because of Web3, the wallet is very fundamental as the account. Wallet is the account in the Web3. But always somebody is holding this wallet. Wallet to wallet transaction can be very smooth, or you call the permission list 24/7. But who owns this account? You can disclose. You can choose to disclose or choose not to disclose. But if you choose not to disclose, this account must be restricted for many activities, so-called KYC or whitelisted wallet. Then you can, among the whitelisted wallets, you can trade. That's one of the fundamental or very basic way to address how to combine the KYC to the Web3. We designed a little bit of framework. I called it KYC plus KYW, know your client and know your wallet. So the people are responsible, the owner of the wallet is responsible for the activities associated with this wallet. Just like a bank account, you can have a bank account, but people can choose to lend this bank account to somebody else to use, but you are accountable for the activities for your conducts and activities associated with your bank account. You need to explain if some funny things happen. So it is doable. But some misunderstanding put in there is, again, I don't think centralization means deregulation.
Now, we're all in this business not just for fun, but also to make money. And the name of the game in asset management is scale. So you're certainly among all the players who have a Bitcoin ETF, one of the most successful ones so far. But in comparison to TradFi, you're all minnows still, right? And so what's the path to scale for you?
Well, I mean, these are, I would say, kind of tip of the iceberg products, right? So they're opening the door, they're bringing in more institutional capital, they're record breaking from an ETF standpoint, from the assets under management. And then you look at what's next, right? So we had spot Bitcoin in January, ETH ETF about 6 months later, which was actually a surprise because we thought that there was going to have to be the jurisdictional hurdle of getting the question answered in the United States with regard to security definition and whether ETH is or is not going to be considered a security. So it was a pleasant surprise that we were able to get that product launched without going through that rigmarole with the SEC. But then looking across the other crypto assets, it's what's next? What's the next ETF? And it doesn't just have to be an ETF. There are other products that can be created, but that has to go hand in hand with the regulators and getting comfort that are they sufficiently decentralized that they're not going to be considered a security? And this gets into a much larger question with regard to the market structure legislation that has been trying to get passed in the United States. There's been a cohort of bipartisan support around the House Financial Services Committee, Representative McHenry, who's been pushing FIT 21. So that's made a lot of headway and had an historic vote where we had a number of Democratic members of Congress supporting it, which historically it's been more of a Republican base of support for crypto, but it's growing in terms of the support across the aisle for crypto, which is great. Just seeing the evolution and the learning across members of Congress in both houses from more of your kind of 101 level of understanding or no understanding. Some folks would completely rely on the SEC to say, okay, they're the expert. We're going to let them take the reins here and make the decisions around crypto. Now you have more of a push and a deeper penetration within Congress for members of Congress that want to have their own understanding. They don't just want to rely on what Gary Gensler is going to tell them they should do. And that is a great development. And it's a development that needs to happen because these are the folks that are going to create the market structure legislation. And that will unlock a lot more possibility down the road because if you know it's not a security and you have that clarity, it's going to determine who's going to regulate it, right? Because we have a jurisdictional arm wrestling going on between the SEC and the CFTC in the US, and that's actually caused a lot of issue around being able to safely launch products in the space. So if you can, and if we can, definitionally figure it out, and kudos to Japan for being at the forefront of putting together definitions and making sure that there's a clear roadmap, then we will have, not just us as an issuer at Bitwise, but other issuers will have the path forward towards other products that won't be met with disdain or this is a wrong product that you shouldn't have. So it's an ongoing dialogue with the regulator. It's an ongoing dialogue with Congress, and then just trying to get that market structure legislation. But everything's a little bit on hold because we've got this, maybe you've heard of it, a little election going on in the United States right now.
We've got one coming too, maybe. At least we've got an LDP election, maybe a general election after that. But Henry, how do you make money? So many DEXs start off having token, and then that token might increase in value. Are you tokenized, or how is DigiFT set up?
Yeah, rather say how to make money is, I would address it in a way is how do we create values? if you create true values, then you can realize, capture these values, right, which is so-called commercially viable. I would say when we're doing the so-called things in a new way, is we ask why we did a new way. Now, is there any deficiency in the current way? In the current way, if no, that's perfect stage. We just enjoy it. But if not, there's room to improve. That one applied to the current assets and also to the new assets. I like what Katherine also mentioned, but I will probably have some further question to you is in terms of roadmap, what kind of new products we can offer better to the money side. I think there's a lot of room to explore. For example, people know U.S. Treasury, right, or government bonds. Government bond, largest country, U.S., the single largest financial instrument issued in the world is U.S. T-bills. It's talk about 10 trillions. Everybody knows what is T-bill, and the return is 5% something now. But look at the people just in this room. How many of you can get U.S. Treasury easily? Especially for a non-U.S. person. Can you get a U.S. Treasury? And can you get a U.S. Treasury at any amount, at any time, at your wish? The answer, the percentage could be very low. So that side is the one single largest issued financial instrument. Most of people don't have easy access to it. So there's room to improve. And there are many other assets. And again, if you're holding U.S. Treasury because it's very stable, 5%, value very stable, then what's the use case? You use as an asset allocation, treasury management as a pledge. If as a treasury management, can you settle in seconds? Just you money to treasury bill in seconds, and a treasury bill back to money in seconds. This is not T plus 0. It is seconds, which means after 10 seconds or 20 seconds, you can use the money, sell the instrument, get the money back, and then you can use the money for other purposes. Send to somebody else or buy something else or buy BTC. So that would be the ideal stage people want to achieve. And now there's an opportunity is achievable, so-called the token-to-token, wallet-to-wallet, we call the atomic settlement and the real-time settlement. If coming to this stage, then the whole treasury management can be reimagined because you don't really need to do so much forecasting how much money I want to receive and pay. You just put all the money in these financial instruments, earn interest. When you get it in seconds, you can have it. So that's the way I would say the true value if we can create, then of course people were willing to pay, and we have a commercially viable structure. That side is traditional kind of assets can leverage on this kind of new approach to get it. And also very, very excited what like Katherine and Bitwise is doing is those assets are already new assets, not only because they call the BTC, they have a decent value growth over the past time and have a good outlook. But more important, as equally important is how BTC type of new assets, we call the token assets or crypto assets, they are organized. From day one, they are organized as a so-called indigenous or native crypto tokens. They are clearing settled in a token way from the first day of birth. Katherine mentioned this in-kind trading. When we say we are now using fiat currency to trade BTC. Later on, maybe it should be the token money to trade BTC or BTC to trade BTC because they are also in-kind. They are token already. So the efficiency is already there. Then if we settle this one, we even don't need the current lot of infrastructure. You can just so-called a smart contract interaction and automatic. That's a totally new way. That's why coming to that, if I can hijack your topic a little bit, is I want to ask Katherine is, in addition to the ETF, which is one form of wrapped traditional financial form, any other assets you are going to launch to the market which you think the investors can enjoy? This kind of new asset classes.
One step that needs to be answered, the jurisdictional hook that was used to be able to launch spot Bitcoin and spot ETH is the fact of the futures trading that went on in both of those, the regulated market. You need to have a regulated market of significant size in order to assure that this is what gave the SEC comfort ultimately after many years and the Grayscale lawsuit. But at any rate, you have to have that to be able to make sure that you would be ahead with, like, you can look at lead lag analysis and know that, okay, we would spot it on the spot market because we have this other regulated market that leads in pricing relative to the other market. Right now, with some of the other digital assets that are newer, you don't have that base. So what we need to do for issuances in, say, other, like there's a number of Solana ETF attempts that just got denied and shut down. We need to find either need to find another jurisdictional base or get that established trading so we can point to the fact of another regulated market and say, look, SEC, you can get comfort that you'd be able to see fraud and manipulation coming. You can have surveillance sharing agreements. You can create some protections and some buffers around this to give them comfort to go forward on that product. So that's work we need to do, and we need to figure out how we can get to that level of comfort for some of the other single coin assets that we want to do in an ETF. But to your question of other products, there are other vehicles. You can look at 1940 Act. There's you can get exposure indirectly by creating pooled baskets of securities that touch these products. You can get that. It's indirect, but it's still giving you an aspect of diversification. So like, we have a product BWeb where it's a basket of assets that are Web3 related. So they, part of their philosophy and part of their business approach is growth of Web3. So those are other avenues that you can use. But for some of the more innovative products, there's still some jurisdictional hook work that we need to do to get our regulator comfortable with allowing those products to go forward, like the Solana ETF that has just been filed and denied, not by us, but by some other potential issuers. So the communication has to continue in order to get some of these products out there.
So for the final question, maybe, Henry, I'd like to ask you, from your perspective, where you are jurisdictional, product-wise, technology-wise, what would you like to take from Bitwise that you can't currently do? And reverse, Katherine, is there anything that Henry can do based on his license, legislation, jurisdiction, that you would love to do but you can't do in the US?
Love this
question. And we've already planned to talk about this, by the way,
yes.
To see what we can work together.
We definitely will continue. Love this question, because when we say when we sell the TrueFi product, I'll just give an example, be short. When we say this T-bills to the Web3 people, they have no interest. The reason is simple, 5%, no fun. I can earn 15%. I can earn 25%. So I'm keeping my money in this Web3 products. So I don't want to talk about the RWAs. That said, if that story sustained, just like BTC, all the things really can make money, because selling the people can make money is an easy sell. Then why not we introduce this kind of good asset classes or structures, products, right, or called solutions, to a broader scope of money, because it's a real opportunity to earn interest or earn returns. That's why I'm asking Katherine, is ETF is good, why attract 30, 40 billion easily? Because some people believe this is a good asset classes. Then the Web3 assets we should introduce to the broader base. So either ETF go to Japan, ETF go to Singapore, Asia, and other countries, and some other so-called structure, crypto-based structure we develop. Then ETF just one option, then other ways to distribute, because it's real and people has interest to allocate. So that would be the new thing I would say, love to further explore the new asset classes and the new way.
And it would be great to see ETFs here, right? So trying to figure out a way to get Japan comfortable with allowing issuers to launch an ETF would be great development.
Yeah, I think both the sound bites that come out of Tokyo and out of Seoul are not very positive towards ETFs at this point. Mm-hmm. So we'll see. As you said, there are elections coming up and you never know what happens afterwards. So I want to thank you very much. It was a pleasure working with you, preparing for this panel, having this panel, And I really hope that you can find a way to work together commercially as well. And thank you all for being here still so late today. And please do stay on for Takao-san. He's worth your time as well. Thank you.
Thank you.
Thank you.
Thank you very much. Before going, if you three can stand in front of the stage, please. We would like to make a we would like to take a photo. Thank you. Hi, テーマは ETF とデジタル資産でございました。One more with the camera. Thank you very much. The theme was ETFs and digital assets. ありがとうございました。Thank you very much. さあ、お次のセッションは間もなくスタートいたします。皆さんぜひ席の方にお座りになって、準備してください。The next session will begin momentarily, so please wait. Thank you.